Hello students, welcome to my YouTube channel Rising Sun. Today we will be discussing about the fundamental concepts of final accounts. This is the second part of the video for final accounts. In the first part we had discussed the very basic concepts of final accounts. So to prepare final accounts, that is balance sheet and profit and loss account, you need is trial balance. In this chapter we are learning to prepare final accounts of the partnership firm. Final accounts of partnership firm. So you need trial balance. You will be given a trial balance, and out of that and from that trial balance you have to prepare balance sheet and profit and loss account. So as you can see here, trial balance consists of the debit balances of all the ledgers as well as the credit balances of all the ledgers. One thing you have to remember is that the debit balances indicates assets and expenses, while the credit balances indicates the income and gain. We have to prepare trading account, profit and loss account and balance sheet using the trial balance. The trial balances are the ledger balances. The trial balance is the ledger balances of all the ledgers. Accounts are classified into three types, that is personal account, real account and nominal account. So personal accounts are in the name of the persons or institutions, and real accounts are all the assets. So balances of personal account and real accounts will go to balance sheet. We have to record them in the balance sheet. And balances of the nominal accounts. Nominal account means income or gain, expenses and losses. So balances of nominal accounts will be recorded in profit and loss account. So hence we have to identify the accounts given in the trial balance into personal, real and nominal account. If the account is personal or real, then it will be shown in the balance sheet, and if it is a nominal account, it will be shown in profit and loss account. So here as you can see, these are the different accounts with the balances, the debit balance and the credit balance. To prepare trading account, we have to consider only direct expenses and direct income. To prepare the trading account, we have to consider only direct expense and direct income. All the direct expenses will be debited to the trading account and direct income will be credited to trading account. By meaning of direct expense means all those expenses which are related to the manufacturing activities or factory expenses. All those expenses which are related to the manufacturing, production or factory are direct expenses, and direct income means all those incomes which are due to sales or operational activity of the firm. due to sales. So since trading account is concerned with expense and income, trading account is a nominal account. And all the indirect expenses and indirect income will be recorded in the profit and loss account. So indirect expenses will be recorded in the profit and loss account on the debit side, and indirect income will be recorded in the profit and loss account credit. Profit and loss account is also a nominal account, and indirect expense means all those expenses which are not related to the factory. For example of indirect expenses, we can consider the expenses for administration, selling, marketing, etc. So these expenses are not related to factory or manufacturing. And similarly, by indirect income, we mean that the income arised due to activities other than manufacturing. Means the income due to other sources, such as example, rent received by a company manufacturing, for example, automobiles. Interest received. So P&L account is, profit and loss account is also a nominal account, and balance sheet is nothing but a statement. Balance sheet is a statement showing the financial position of a company on a particular date. The balance sheet will consist of assets and liabilities. So important thing is that you have to identify whether a particular account is an asset or a liability or an expense or a income. And further, by identifying a particular account as an expense, you further have to identify whether it is a direct expense or an indirect expense, direct income or indirect income. We can see in the trading account here, we can see that the debit side consists of all the expenses. Trading account, on the debit side, there will always be opening stock. The trading account will show opening stock on the debit side. The opening stock for the current year is the closing stock for the previous year. You can see purchase. By purchase, we mean that it's the purchase of raw materials. So these are purchase of goods, which is a direct expense. From that, you have to reduce the purchase returns. You can also see carriage inward. It's a direct expense because carriage inwards is the transportation cost paid due to procuring or making available the raw materials. Freight, dock charges, customs duty, wages, manufacturing wages, wages and salaries, import duties, coal, coke, gas, motive power, oil, water, grease and royalty. All these are direct expenses. these are related to the manufacturing activity or factory. On the credit side, you can see direct income. Sale less return will be shown on the credit side of the trading account. Any reduction in the stock will be shown in the credit side of the trading account. So that reduction in the stock may be due to fire, due to theft, due to distribution as free samples, if goods lost in accident or withdrawn by the partners or drawing. In any of these cases, you can see that the stock of the firm is reduced. To reduce the stock in all of these cases, we have to credit trading account. Similarly, all the indirect expenses and indirect income are shown in the profit and loss account. So this is the pro forma of profit and loss account, where you can see the indirect expenses on the debit side and indirect income on the credit side. Examples, we will see few examples of the indirect expenses. This is the profit and loss account. It is also a nominal account. Salaries and wages, rent paid, insurance, electricity, telephone, printing, traveling expense to salesman, depreciation of assets, loading charges, audit fees, entertainment expenses, etc. All these are not related to factory or production. Hence, these are indirect expenses, and they will be shown in the debit side of the profit and loss account. Similarly, on the credit side, you can see commission received, discount earned, interest received, dividend received, rent received, or sundry miscellaneous receipts, etc. These are all the income which are not related to the manufacturing or factory. So these are not the income related to the main operations of the business. These are all other sources, income from other sources. They will be indirect income, and it will be shown in the credit side of the profit and loss account. Balance sheet will consist of assets and liabilities. All the fixed assets like land and building, plant and machinery, furniture, equipment, etc. will be shown, along with goodwill, if any. Goodwill is an intangible fixed asset. Goodwill is the reputation of the business expressed in terms of money. Similarly, assets will also consist of current assets like closing stock, debtors, closing stock, bills receivable, cash in hand, cash at bank, etc. So all the assets will appear in the balance sheet, and liabilities will contain or consist of capital accounts of the partners. If the partners are maintaining current account, then the current account balances will be shown in the liability side. If the current account has a credit balance, it will be shown in the liability side. General reserves, which are undistributed profits, profit and loss account, undistributed profit, loan, bank loan, loan from partners. These are some of the non-current liabilities. Then current liabilities like bills payable, bank overdraft, sundry creditors, etc. These will be shown in the liabilities side. In this way, with the help of trial balance, we have to record either of all of these accounts in trading account or P&L account or balance sheet. The balances of all these accounts will go to either trading account or P&L account or balance sheet, depending upon whether the account is asset or liability or expense or income. So assets, liabilities, expense, income are deciding whether the account will be shown in trading account, P&L account or balance sheet. One thing we have to remember is that all the personal accounts and real accounts, balances of personal accounts and real accounts will be appearing in balance sheet, and the balances of the nominal account will appear in trading account or profit and loss account, depending whether the expense or income is direct or indirect. So in this way, we have to first identify these ledgers, all these ledgers. So here you can see the trial balance given and the various ledgers. Students, in my next video I will show you how to post these individual accounts in the respective ledger like trading account or profit and loss account and balance sheet by actually discussing or solving a particular problem, which will be much more clear. This video was only to discuss with you the basic concepts. In my next part, we will solve a practical problem. Hope this video was useful to you to understand the concept. If you find this video useful, please like, share and subscribe to my channel. In my next video, I will be solving a problem on final accounts of the partnership firm. Thanks for watching my channel.